So, good morning, friends. So, today we will talk about equity research. So, what is equity research? So, by name, you can understand that equity means your stocks, and research means by researching on the companies through different uh, ways to understand whether means which company is good for long term, or where to invest our money, where to invest our capital to uh, make a good return, right? So this is basically equity research. Now I want to become a equity research analyst. So what are the job profiles, or what are the work which they do, equity research analyst, right? So you can say there are five pillars of equity research. So the very first pillar is your corporate governance. Corporate governance is the qualitative aspect of any company, and it's a very important thing to understand, but majority of the people ignore this corporate governance part. uh, but many good businesses can also uh, go downfall due to bad corporate governance. Like recently, Gensol Engineering, we have seen what happened. So very first thing which we need to take into consideration is that corporate governance. Then the second thing is your uh, what we call the financial statements of any company. Second thing which you look for is your is financial statements of that company. In financial statements, what are the things comes? Your balance sheet, your income statement, your cash flow statement. So these things you need to check. So financial statement is quantitative aspect of any company. To understand any company, uh, how it's growing, what are their revenue growth. So all these things you should check. What are their PAT, means your profit after tax, whether the company is growing or not every year. So all these things you can understand by seeing their financial reports. So second thing which you see is financial reports. The second, you can say, second pillar of equity research is your financial reports. Then third is your industry analysis. Means it's very much possible that a company is very good, doing good business, making good profits, having good profit margins, but the industry is not growing, right? Or the future of that industry is not that good. So third pillar is your industry analysis. You need to check that whether the industry is growing or not, or how fast the industry is growing. What's the growth rate for that particular industry in which that company is. So third thing you need to check is industry. Then fourth thing, or you can say the fourth pillar of equity research is your valuation. Means company is good, your means the industry is good, industry is growing. Now you need to check that whether company is demanding a fair value or not, company is undervalued or overvalued, or whether the valuation is good for that company or not. And then only you can invest in that company, because there are many fund managers, many investors who take it very seriously. The valuation part, take it very seriously. uh, I have seen many fund managers who have said that uh, they didn't invest in very good stocks just because the valuation which they thought, uh, that company never came to that valuation. Otherwise the company good, industry is good, financial statements is good, the people behind the company, means the corporate governance is good, everything is good, but just because the valuation didn't match with their expectation, that's why they didn't bought that stock. So all these fund managers and people, they took it very seriously, the valuation part. Now after you check the valuation, then comes the fifth pillar, you can say, is your report writing. Means as a equity research analyst, After researching on a company, like corporate governance, then your industry analysis, financial statements, after doing all these things, you need to make a report and submit it to, whether you are, if you are working in a company, so you have to submit it to your seniors, right? Or if you are working for any private firm, so you can sell your uh, equity research report. So you need to do report writing. So report writing is fifth pillar of your equity research, right? So before understanding the intricacies of your corporate governance, we need to first understand, uh, we need to understand how corporate structure works, right? So under corporate structure, there are three types of structure which exist. First is your proprietorship, second is your partnership, and third is your body corporate, right? So what is proprietorship? Proprietorship means you solely own the uh, whole business, and you are the only proprietor of that business. You are running a business like any kirana shop, or only one person is managing all the business works, right? So this is your proprietorship business, where only one person is a sole owner of that company. So now in this type of businesses, the liability is unlimited, and proprietor has to bear the losses, even even if they face any major issues with the business, right? So the liability in proprietorship business is unlimited. And if I talk about corporate governance in uh, proprietorship business, so in proprietorship business, the sole decision maker is the proprietor only. So all the governance decision is based on him only, right? To that sole proprietor. Now the second type of business is your partnership. Now in partnership, there are two or more than two people come along, and they pool their funds, their capital, or however they do business, right? They join together, and including their assets or capital, and then they do business. So in partnership also, there are two types of partnership. One is your general partnership, and second is your limited liability partnership. So in general partnership, um, the if any partner screwed up, then the liability is upon all the partners. Means, let's suppose I am doing a partnership business with some of my friends. So if my friend do something wrong in that company, then definitely I am also liable for his act. So so that is your general partnership, right? But in case of limited liability partnership, in limited liability partnership, the liability is limited for all the partners, and it is generally limited to the capital they have invested while incorporating the business. And partnership business is governed by partnership deed. When you go for a partnership business, then you have to make a partnership deed, right? And the third, which we talked about, is body corporate. Now body corporate is separate legal entity from its owners. Means owners are different, and that company is body corporate is different. So under body corporates, there again three, you can say, three parts are there. Like your first is your क्या बोलते हैं, private company. Second is your public company, but which are not listed, right? And third is your public company which are listed. Listed means which are listed in stock market, stock exchange. So now let's talk about private company. So private company is your governed by section 2 subsection 68. Public company governed by section 2 subsection 71, I guess. And public company with who are unlisted, and public company which are listed are governed section 2 and subsection 52, most probably. Let me check. Yeah, yeah, right. So now private company. So in private company, the minimum members should be 2, and the maximum members is 200. But for a public company, minimum numbers has to be 7, and maximum numbers there are no limit, right? And in private company, the minimum directors have to be 2, and in public company which are unlisted, the minimum directors should be 3, and public company which are listed, the minimum director should be 3, and in which one must be a woman, right? So one more thing about private company. In private company, you cannot transfer your shares. There is a restrictions in transferring your shares, and you cannot invite public to invest in your business, invest in your company. But in public company which are unlisted, so they cannot take funds from stock market. They can मतलब they can वो लोग पैसा उठा सकते हैं, but not from stock market, right? They can raise capital not from stock market, but who are who are listed in stock exchange, they can definitely invite public to invest into their companies. So this is private company, public which are listed and which are unlisted. और क्या बोल सकते हैं, हाँ, प्राइवेट कंपनी को गवर्न करते हैं मतलब इट इज़ योर मतलब रेगुलेटरी बॉडी, रेगुलेटरी अथॉरिटी इज फॉर प्राइवेट कंपनी इज MCA. मतलब फॉर प्राइवेट और पब्लिक कंपनी, एवरी कंपनी इज regulated by MCA, and the company which are listed in the stock exchange, so along with MCA, SEBI will also regulate them, because when SEBI is your basically regulatory body for your markets. So if you are going into market, if you have listed your company into stock exchange, then definitely SEBI will also have a role to play. So SEBI also regulates you, right? So in under body corporates, we have talked about 3 things: your private company, public which are listed, and public company which are not listed, right? Now let's talk about the anatomy of your what we call public company. Public company is listed company, right? Which are in stock exchange. So there are 2 parts, you can say, in listed company. First is your shareholders, then second is your board of directors, right? Shareholders, board of directors. So now shareholders, there are different types of shareholders, right? Like one is your promoter. Promoter are basically those people who have very significant stake in a company, right? कोई भी example you can take, who have started the company, or who have the big chunk of shares in that company, so they are generally called promoters. Then second shareholders could be your FIIs. FIIs, your foreign institutional investors. Foreign institutional investors means the entities which are based on abroad, and they invest in Indian markets through pension funds or different schemes, right? Different mutual funds, different pensions funds and all. Example, you can say Morgan Stanley, Vanguard and all, etc. So FIs and FPIs are different. FPIs is your foreign portfolio investors, means an individual and foreign individual who invest money in Indian markets. So that is FPIs, right? So one more promoter means one more shareholder you can say as a DIIs, means domestic institutional investors. So domestic institutional investors are same as FIIs only, but FIIs are foreign institutional investors, and in India there are various domestic institutional investors like your LIC and different mutual fund houses, different AMCs. So these are called your domestic institutional investors. They also invest in markets. So right now, if you see our stock market is um, supported by our DIIs only, because FIIs are selling very heavily, but DIIs are supporting our stock market, and our markets are really going very good, right? So DIIs are also shareholders, and then comes retail shareholders, means we individual shareholders, right? So ये एक हो गया shareholder, and then comes your board of directors. Now board of directors, so board of directors में भी तीन तरह के लोग होते हैं. So in board of directors, three types of people which work. First is your executive directors, second is your non-executive directors, and third is your independent directors. So executive directors are the people who actively manage day-to-day operations of any business. So they are called executive directors. Whereas means example you can take like CEO, CTO, CFO, all the CXOs, right? So they are called executive directors because they actively take part in day-to-day operations of the businesses, right? Then comes your non-executive directors. Who are non-executive directors? Non-executive directors are people, आप कह सकते हो, आर रिटायर्ड फ्रॉम देयर कंपनी. मतलब रिटायर्ड कहना ठीक नहीं होगा, मीन्स मतलब हो जाता है ना जिनका बहुत एज हो जाता है, उनको बस कंपनी में ऐसे बैठा के रखा है दैट यू आर देयर जस्ट फॉर गाइडेंस, है ना. मीन्स दे डोंट टेक पार्ट इन डे टू डे ऑपरेशंस ऑफ द बिजनेस, है ना. दे जस्ट देयर just to advise or just to give directions to the company. They will not actively take part in company operations. So they are your नॉन एग्जीक्यूटिव डायरेक्टर्स. मतलब एग्जांपल के लिए आप ले सकते हो, लेट्स सपोज क्या ले एग्जांपल, मतलब जैसे मान लो रतन टाटा जी हैं. अब रतन टाटा जी को कंपनी में ऐसे एज अ नॉन एग्जीक्यूटिव डायरेक्टर रख दिया गया है कि सर आपकी बहुत एज हो गई है, आपने बहुत बिजनेस संभाला है, नाउ हम लोग संभालते हैं बिजनेस, यू जस्ट स्टे देयर इन द कंपनी, है ना. और कोई भी इफ़ मेजर डिसीजंस if you have to take, then we will consult you, and you will just give directions to us. So like that they give us a designation, you can say, or a post that is called non-executive director, right? And then comes very important, that is your independent directors. So these executive directors and non-executive directors are you can say dependent on the company pays salary to them. But here comes the independent directors. Independent directors who are not dependent on any salary from the company. They are the real you can say the watchdogs for a retail investors. They look after the company, they look at very objective way, and they are the people. Independent directors are the people who whistle blow any company, who gives a whistle blow for any company if company is doing a wrong thing, you know. If company is doing any illegal activity or doing something wrong, then these are the people. Independent directors are the people who who gives a whistle at a very first place, right? And these are the people who talks on behalf of individual investors in the board meetings. So they are very important in any company, the individual directors, right? And और इंडिविजुअल डायरेक्टर्स मतलब उनका जो मीटिंग होता है, सो उनको कुछ एक फ़ीस दिया जाता है इंडिविजुअल डायरेक्टर्स को, उसको सिटिंग फीस बोला जाता है. है ना. So companies paid them sitting fees for coming to their meetings and contribute. So अब इसका भी एक प्रोसेस होता है, आपका इंडिविजुअल डायरेक्टर्स कैसे डिसाइड होते हैं एंड ऑल दिस थिंग्स प्रोसेस होता है, बट विल टॉक अबाउट लेटर. बट बात करते हैं कि इंडिपेंडेंट डायरेक्टर्स मतलब काम क्या करते हैं, राइट. हाउ डज द इंडिपेंडेंट डायरेक्टर्स और हाउ डज दिस बोर्ड मीटिंग्स और बोर्ड ऑफ डायरेक्टर्स दे वर्क, board of members work. So basically board members are divided into different committees, and there are in any company there are different committees which present in any company, and these board members, they present in different committees, and every committee has a role to play, um, has a key significant role to play. Like we'll talk about various committees, like there is one committee called your risk management committee, because in any business there could be any uh, future risk, you know. So for mitigating that risk or to manage that risk, company has this risk management committee. One more committee you can say the legal committee, means which look after the legal aspect of any company, of any businesses, means all the legal issues should be handled. क्योंकि आप जब काम कर रहे हो, जब आप बिजनेस कर रहे हो, सो आपको पता होना चाहिए व्हाट आर द लॉ ऑफ लैंड सेज, है ना. सो यू नीड टू लुक अपॉन ऑल दिस थिंग्स एंड चेक वेदर योर कंपनी इज following all the rules, all the government rules or not, government laws or not. So you need a legal committee. Then comes your audit committee, which look after your financial statements, है ना, कि everything is fair or not. So audit committee is there. Then comes your एक और आता है CSR, है ना, कॉर्पोरेट सोशल रिस्पॉन्सिबिलिटी, CSR कमिटी. हाँ, वन मोर तो बहुत इंपॉर्टेंट विच आई फॉरगॉट इज योर रेमुनरेशन कमिटी. मीन्स हाउ मच रेमुनरेशन शुड बी गिवन टू members, मतलब should be board member given to board members, or should be given to all CXOs, or the people, salaried people. So all these things are decided by remuneration committee. This is also a very important committee which we have to check. CSR तो मैंने फिर बोल ही दिया. So these are some committees जिसपे ये सब board members they sit and मतलब they form a group, they form this committee and work accordingly, right. And these committees or these board members should be, मतलब these especially the you can say the independent directors, or these directors should be competent enough to handle all these things, right. Like their educational background should be aligned with the company business, and all these things should be checked, right, under corporate governance things. And as I said, that corporate meetings which happened, or उसमें all these independent directors are called, so whether they are coming or not, how are their attendance, you know, their attendance should be good. Means if any independent director is not going to any of board meetings, then this should be a red flag, you can say. So all these things you need to check, right. Because corporate governance is, as I said, is very important thing to check at very first. And a company is doing good, it's not that it will continue to do good if the people behind the company is if you don't know about them, or if they are not sincere enough, if they are not competent enough, then what's the point of investing your money to any company. So corporate governance is very important aspect of any business you should check. Many people, what they do, they just ignore this corporate governance part. What they look is which stock has given a run up, has given bull run, or कौन सा stock, which stock is in news now, right now, है ना. And some fools also follow the stock tips which they get from Telegram. So and हाँ एक और people look for companies which are trading at very low मतलब low valuation or at very cheap rates है ना, like Paytm. People nowadays still people are buying Yes Bank and Paytm like stocks. So people look for all these things, you know, but they forget about corporate governance, which is a very very important aspect, right? Like diamond is judged into 3C. The first is your cut, clarity and carrot. So likewise, any you can say any board members or great managers are also should also be assessed on 3C. First is your um, first you can say your competence, whether you are skilled enough, whether you are knowledgeable enough or not. Then comes your क्या बोलते हैं, then comes your character, है ना, मतलब as a person how you are, what's your character. So character is very important, your integrity, your values. So first is your you can say character, competency, and third is your commitment towards your company, right? Whether you are energetic enough, whether you are motivated enough or driven enough to take this company to a new high, you know. So commitment should also be checked. For great managers, all three C's must be there, right? So क्या बात, हाँ कॉर्पोरेट गवर्नेंस की अगर हम बात करें, सो मतलब what's the better way to understand the fate of unethical practices than your corporate scandals, right? So I think corporate scandals are the best way to understand these things, that how corporate governance is plays a very important role, and why we should check this. So maybe in क्योंकि वीडियो तो मतलब बहुत ज़्यादा लंबा हो गया, 30 मिनट्स का हो गया. So we will talk about different corporate scandals like your Satyam scandal और ये सब जो scandals हुए हैं. So I think to understand any unethical business or to understand these things, we need to study different corporate scandals. So maybe we will cover this in our later videos. So thank you friends. Jai Hind, Jai Bharat.